And today marks the day that I am back in business with Topstep finally. If you guys didn't see my last few videos from last week, you wouldn't have known that I got packed off from buying any more Topstep combines last month, which meant that I had to wait till March the 1st to buy some more Topstep combines. Yesterday was the first trading day of the month. I ended up blowing about 12 to 15 Topstep combines. Don't ask me how. You probably know, but at the same time, when you are eval cycling, you're going to have those times where you do blow a lot of accounts. But nevertheless, the quitters never win and the winners never quit. After blowing about a dozen evals yesterday, I proceeded to buy another 3 more. In New York AM session yesterday, I ended up passing, sorry, I'm out of breath. In New York session yesterday, I ended up hitting max profit on them, hopped on the markets on Asia to pass them, and I passed them, which gave me the opportunity to copy trade 3 express accounts today on market open. I did so, and I'm up a total of $3,100 on the day, which is split into basically 1K on each account. I took 2 trades to get here, so let's just get into the trade recaps. So as I said, I'm pretty out of breath, so don't expect the best of descriptions from me. This is no excuse and it's not a good one, but I've been feeling crap the whole day, haven't done anything, but regardless, I'm going to show up for YouTube because I definitely avoided doing it yesterday. But anyway, here are the trades. First loss was acceptable. I mean, I don't really care that I took the loss. I stuck to my rules. I waited for shit that I wanted to see happen. And yeah, I did the majority of shit that I needed to do. Don't mind my language. Like, I'm just saying shit for how it is. Second trade was great. I mean, entered off of a 1-minute inversion for value gap. Obviously, this is the bland way of saying it, but ended up entering off of a 1-minute inversion. I layered into that position. I took 2 contracts off at this low. I took 2 contracts off at this low, left 1 run until the final low, and unfortunately that got stopped off a break even. But who gives a shit, because I was already up on the day. So anyway, getting the chart executions out of here, let's just get into how I formed a bias for today and how I ended up executing with such precision in my eyes. So looking at the high time frames on the weekly time frame, you will already know we're in a bearish time frame. What represents a bearish time frame? Sorry, what represents bearish price action? Bearish price action is represented by, you could say, news, but on the more technical side of the markets, high time frame change in state deliveries, high time frame liquidity sweeps, high time frame higher highs being rejected, in the sense that when buy side liquidity is taken, price proceeds to reject off of it instead of continue going to the upside hunting for more. What does that look like on the chart right now? Weekly time frame, we had a previous month high sweep paired with an S&T with all-time highs that shot price to the downside. We ended up breaking under weekly change in state delivery. What can we see? We've had from ever since we've broken structure to the downside, we have just seen bearish price action. We came into it, we rejected it, we came back into it, we rejected it. We're finally in the range again. We are proceeding to go to the downside, and maybe we will, maybe we won't, but regardless, we're just here to get our piece of the pie, and that's exactly what we did today. So looking at the lower time frames, already having a bearish bias to November's low and previous month's low, we can see yesterday what happened on the charts. Price was bullish all the way through till these relative equal highs were swept out. This ended up putting in an internal S&T. Price rejects to the downside. If we look on the 4-hour time frame, we can see not 1 4-hour for value gap was inversed, but 2 4-hour for value gaps got inversed. And as I said earlier, if we want to be bearish, we're going to be disrespecting any chance of bullish price action. We're in a high time frame bearish trend. We're in a low time frame bearish trend. We are not looking for buys on the markets. It is as simple as that. So, does price need to return to this for value gap to go down? Does price need to come to this for value gap to return down? Maybe in the high time frame, bigger perspective of things, but not for how we executed today. So marking out our draws on liquidity, we're going to mark out previous day highs and lows, session highs and lows, and the opening gap range. So already off the bat, we can see that we have got London high, Asia high, a bullish opening gap range, previous day high, previous day low. It was pretty damn obvious today that when you have so much built up liquidity on the upside, or it can be the other way around, price is just going to trade with the trend. The trend for today was opening up bearish. We had produced a bunch of low resistance liquidity above Asia high. We then produced Asia's high, produced another bunch of low resistance liquidity before London high. London high gets put in, and then proceeds to engineer a bunch more liquidity internally. And what does all of this show us? This shows us that price has got an indefinite reason to go to the downside, and it is just not stopping for anything. So in this position, we're going to look for a pullback on the high time frames, obviously. Hourly time frame, you can say that us coming back to this 1 hour for value gap was a great confirmation, but at the same time, we're not really looking for high time frame PD arrays to get respected in this range. We're just looking for internal confluences that price has good reason to continue internally to the downside. So as market opens up, New York AM session, it ends up sweeping up this high immediately, putting in an S&T with it as well. Now, looking at the charts and the way I trade is basically just, I'm trading order flow in the overall perspective. And then technically I need to have an S&T, internal manipulation, a change in state delivery, and a confident draw on liquidity to enter the trade. So in this position, naturally, internal or manipulation or just stop runs in general will not look like a significant high getting swept. They look like price rejecting lower and then sweeping the newly made internal high like that. Now, in hindsight, was the first trade I took good? It was not the worst, but it also was not the best because in a sense, it did not have any internal manipulation. So obviously I'm going to show you an explanation of this trade, like I'd be stupid not to. So if we've already got our confident draws on liquidity being to the downside, we've got previous month's low resting below, we've got November's low resting below, we've got this significant low, we've got all of this low resistance liquidity here, and we've got all of this low resistance liquidity here. I was just aiming to take the first inversion for value gap because it just presents to me that price is disrespecting bullish structure. It is breaking away from creating new higher highs. So as soon as price came to the upside, putting in an S&T with this significant high, ES did not, obviously. We've got all of this low resistance liquidity resting below. I entered after the inverse of value gap was put in, stop loss at the recent high. I don't know why on earth my MacBook is bugging out. Yeah, it's pretty hot, that's why. That's bad. I'm out of breath already, man. It's annoying. I put my stop plot. Nah, this thing's overheating. Give me a second. Fucking hell, this MacBook is shit. This MacBook is shit. After I entered the inverse for value gap, price ended up shooting all the way up to stop me out internally, which was annoying, but it's just the way things go, innit? So I am back now, and yeah, man, I mean, once you get market experience, you understand that majority of the times, if you are right with the bias on the markets and you do end up getting stopped out or just manipulated, price gives you even more reason to continue to your presumed draw on liquidity now. So that's the exact same shit that went on for me today. Price ended up sweeping internally to the upside, not putting in an SMT with this high, but it did end up holding the SMT with that significant high. Price then came to the downside. As soon as it inversed this 1 minute value gap, I was like, cool. We've got so much reason to continue to the downside now that why wouldn't we? Exactly, that's my point. Why wouldn't we? So I'm not going to be hesitant. I'm going to be confident with the trades that I'm taking. And I'm just going to take what is presented to me. And that's exactly what happened today. I ended up setting my original take profit just to be at this low. I ended up starting off the trade with 2 micros. So as we know, on this trade, I ended up hitting stop loss. Naturally, in each trade, I want to be risking $250 per trade. Now, my risk to reward isn't fixed, but naturally, if I have a high RR trade, I'm going to take partials throughout the run of it because I'd rather secure profits than secure a home run, because at the end of the day, profits are going to pay you more than your emotions and home runs are. So if you understood that, then good. If you didn't, then it is what it is. But after taking the first inverse for value gap, I ended up moving price to my I ended up moving my stop loss to break even as soon as this low got tapped into, or as soon as this the value gap got inversed. And then I understood that, cool, price has got a very good reason to go to the upside and stop run me. So I ended up holding my stop loss at this high. Price then proceeded to come to the upside. It ended up SL banging people who had the same idea as me but weren't as confident and moved their stop loss to break even. So everyone who got SL banged here, learn how markets move. I mean, it wasn't luck that put me in a position where I found myself not to get SL banged, but as soon as price came to the upside, I was like, cool. If we're going to reject lower, we're going to reject lower here. So I ended up layering into my position. I ended up adding in another 3 micro contracts here. And look, people, when I opened up this position for the trade, my stop loss was $273. When I layered into the position here, I ended up making my position size about 150% more. So I added on 150% worth of position size, but my stop loss ended up being $250. So in comparison from my first entry, I was now risking $20 less with an 150% more sizing. Make that make sense. Make that make sense. It's another great concept to learn in the markets, but anyway, that's a lesson for another day. But anyway, I really don't want to be filming this. I hate to be filming like this because it's just like, bro, I don't think people can learn from this shit, and I don't feel good about posting it, but my nose is stuffy. My stomach feels like shit. My body feels like shit. I haven't been to the gym today. I haven't had a shower today. I've been on my phone all day. I've been watching shit online all day. I've been fucking up my health, man, and I've been fucking up my day. And don't claim this negative energy. I'm just trying to give you a fresh perspective on what it's like to just have a shit day. Because it's definitely not like you don't know what that means. Fucking hell. I mean, I'm just checking out my arse now, but feel like shit, look like shit. Anyway, price ended up just waffling around for about half an hour until it moved to the draw on liquidity. I did obviously hold a runner and that got slots out of break even. But yeah, man, that was not a great trade recap. Hopefully you guys learned something. I'm absolutely fucking boiling. I feel like shit. Hopefully tomorrow I feel a lot better. But anyway, thank you for watching the video and I will see you tomorrow.